scale. You want referrals.
What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market. I got my watch. Because that is simply impossible to do. And I want to continue to stress how important it is to invest. You have to invest, people. I don't understand why most people are not investing. When I log on to my personal social media, I see everyday people doing everything but saving money and investing. But they're spending a lot of money. They're looking like they are worth more than they really are. And I say that they look like that because majority of Americans are in debt. Americans have over $18 trillion in debt. So how are you traveling to all these places? How are you affording these new cars and homes and these clothes that you're wearing? How? It's like, when are we going to stop lying to ourselves and others about our true place in life when it comes to finance? Because that is one thing most people do not talk about, is their money and how much they have or lack thereof of it in their bank account. People do not like talking about money, but they like showing how much they're spending. I wonder why. Anyways, you guys, you need to start investing. That's how you maintain what you have and even grow it even bigger. You have to invest. The rich invest. Stop idolizing rich people and do what they did. You have to put in the hard work. You have to put in, you have to have, not put in, but you have to have discipline. And you have to have a vision, a plan. You got to write it down, write the vision, make it plain, right? So I say all that to say this about the stock market today. It sucked. Yeah, it sucked today. Yeah, everything fell. Even Netflix, right? So let's see what happened today. In my opinion, people just took money off the table. There's nothing wrong with some companies, not all. So yeah, either way, despite my opinion, let's see what the actual news had to say in real time about the stock market today, because it just closed 5 minutes ago. So it says US stocks slid on Wednesday as investors fielded the latest wave of earnings in a busy day highlighted by Tesla and IBM. The Dow Jones Industrial Average fell 0.7%. That's a big drop. The S&P fell 0.5%. And the NASDAQ led losses down 1%. That 1% loss is big, people. The tech companies took a big hit today. So let's see. Wall Street, buoyed by a strong start to third quarter earnings thus far, reassessed. They reassessed. Not me, because I didn't do anything. Not you retail investors. Wall Street reassessed. So that means they took some money off the table. As the first wave of mega cap tech earnings flooded in. Tesla quarterly report is due after the bell, so it should be kicking off soon. And it's kicking off around a magnificent 7 updates that could test the resilience of the recent stock rally. Shares fell around 2.5% in the lead up to the results. Now, these tech companies, 7 tech companies, are pretty much leading the charge in the market. The Tesla, the Amazon, the Google, the Nvidia, the Apple, the Microsoft, the Meta. Did I say Amazon? You get it right. But these companies are like leading the charge right now. So Netflix, what happened to Netflix? Stock dragged other techs lower, dropping more than 10%. After the streaming giant's earnings missed. Now that's the reason why Netflix lost some money today, because they missed their earnings expectations. Even though they earned a lot of money, they missed it. Thanks in part to a Brazil tax dispute. So because of Brazil tax dispute, they missed expectations. Okay. Anywho, shares of Mattel also pulled back as the toy maker's North American sales fell short. Meanwhile, gold added to its losses after booking its biggest one-day decline in over a decade on Tuesday. Markets remain on alert or trade war developments, with President Trump injecting fresh uncertainty around tensions with China. And as a report said, the president could consider steep restrictions on U.S. software exports to China. I don't know why I don't wear these, but I'm supposed to. At the same time, the U.S. and India are reportedly closing in on a deal to cut tariffs to India or on India exports to as low as 15% from its current 50%. Official economic releases are still on hold as the federal shutdown continues. Give me my money. Just kidding. But I would like to get paid. The September Consumer Price Index report on Friday will be the next major data point for markets. The inflation print will help guide expectations ahead of the Federal Reserve's next meeting, which is next week, right? Where traders widely anticipate a 25 basis point interest rate cut. But what if they don't cut interest rates? They're going to just sink the market again? I don't know. But that's pretty much it for today, people. Not a whole lot going on. Netflix missed earnings. Gold went down. Tesla should be putting out its earnings report right now. So let's see what some stocks did today. How much money did we lose? So Palantir lost $6.02 today. That's a big loss. Closing out at $175.49. Broadcom lost $2.36 today, closing out at $340.30. Ouch. FTEC, Information Technology. Remember, the NASDAQ had the biggest loss today. But FTEC lost $2.84 today, closing out at $223.95. Tesla lost $3.63 today, closing out at $438.97. Nvidia lost 88 cents, closing out at $180.28. SPLG, the S&P 500 ETF, lost 41 cents today, closing out at $78.56. You can't go wrong with the S&P, people. For those of you who are new investors, do not try to go out and pick like a single stock. Invest in the S&P 500. It consists of the 500 largest companies in the world. You can invest in VOO. It's very expensive though, which is maintained by Vanguard. Their Fidelity has some. SPLG, you can invest in this one. It's $78 a share. Again, it's managed by them, so you don't have to go out and pick the companies. They're the 500 largest companies in the U.S. And then if one company goes under, you do not lose all of your investment. And over the last 50, 100 years, the S&P 500 has brought back over 10% returns. And you would not get 10% on your money in the bank. So I don't know why people are saving all their money. Now, you should save something. You should have an emergency fund of 3 to 6 months or maybe even a year. It's up to you, right? Of living expenses saved up, and that's it. You don't need to be keeping all of your money in the bank. You should be investing, because your money being left in the bank, and just like a regular savings or checking account, is going down in value. If you don't understand, keep watching videos like this, Google it, read up on it. You're sooner or later get it because of inflation. Inflation is like almost at 3%. So if inflation is at 3%, so that means goods and services are going up. When you go to the grocery store now, when you go to the gas station, when you go shopping, you're noticing the prices of things are going up. That's because of inflation. So if the prices of goods and services are going up, you should want your money to beat inflation. So if inflation is at 3% a year, why not make 10% a year on your money through investment? That's how the rich get richer and remain rich, through their investments and assets that they own, like real estate. You own real estate, you can continue to go up on rent. When I started renting my place out in 20 19, I went up on rent every year because I can, right? So that's how it all works. Hopefully you get it, because I know I tend to talk a lot. Yeah, I said Broadcom. I think, did I cover everything? Yeah, I did. Yeah, that's pretty much it, people. That's it. That's it. That's it. That's it. Again, I can't stress enough how important it is for you guys to invest, how important it is for you guys to get out of debt. You need to get out of debt. Like, I was listening to this call on this guy. He's a truck driver in America, makes $75,000 a year, which is a great income. And he was stressed out because he was $60,000 in debt and helping take care of his mother. And he just bought a home. And he has these medical bills. So the problem in America isn't a money problem. It's not an income problem. It's a mental problem. Mentally, and it's a people problem and how we choose to spend money. But because we don't realize how we're so bombarded on a daily basis with stuff, we buy a lot of things that we don't need. Like, there was another young man, a call I was listening to, where he makes $60,000 a year and he owns a car. His car is like $27,000. So his car that he's buying is almost half of what he makes a year. It's crazy. Your car should not be half of your yearly income. You need to be smarter, people. We need to be smarter. We need to learn how to sacrifice. We need to learn how to live below our means. You don't need everything right now. Like, as I get older, I'm noticing what I can do as I get older because I'm living below my means. I'm pulling back, not pulling back, but I don't need to buy a brand new car right now. But I can buy a brand new car at the age of 60 if I want to. I can buy a Lamborghini at 60 if I want to. Why? Because I can pay cash for it, not finance it, right? So delayed gratification is what I was trying to think of. That's why I kept rambling on, right? You need delayed gratification. We live in a world where we think we need everything now. At the age of 20, you need to be driving that sports car because you see 5 other people on the internet doing it and they're telling you that you can do it also. So you want that same experience. Anywho, I think you get the point. Invest, people. In order to invest, you need to create a plan. And that plan is called a budget. And that budget will help you get out of debt and create a plan in order to take over and control over, well, not over, but of your life. Creating that budget, you start telling your money where to go so you can stop trying to figure out where in the hell it all went before the end of the month comes. So yeah, if you need help creating a budget, let me know. I'm also thinking about doing some stuff like writing an ebook, doing more because I can. And I just need something to do to keep my mind busy. So yeah, that's just a thought. But yeah, get out of debt. Get out of the personal loan debt. Get out of credit card debt. Get out of the car loan debt, and get out of student loan debt. Student loan debt is education is important. Learn a trade, people. Become an electrician. Become a plumber. They're 6-figure earners now. You can start a business. Yeah, I mean, again, education is important, but people are coming out of college now with $80,000 and $60,000 worth of debt and landing a $40,000 or $50,000 job, and you still have to pay off that student loan. You now have to pay for rent. You now need a car, so you're gonna have a car payment for most kids. You gotta pay life insurance. You gotta pay taxes. You gotta pay utilities. You gotta buy food. And the cost of living is only going up. So start living smarter. Start living below your means. Delay that gratification. Warren Buffett still lives in the same home that he bought in the 80s. And he's a billionaire. Stop getting your heads in the cloud and thinking like you have to live like these people on social media who's flying around in these private jets and driving these fancy cars. The jet may not be theirs. It could be a sponsored event of them promoting something, they're just not telling you. And they're posting it on their social media, making money off of something they're not even spending money on. But you are going into debt to try to emulate their life and be like them when it's not even real. Right? All right. So like, comment, subscribe, share this video. Let me know what you think. If you think anything at all. Disclaimer, I'm not a financial advisor, nor am I pretending to be one. So any and all information on my channel is for entertainment purposes only. So please consult with a financial advisor before you invest any of your hard-earned money. All right, so you guys take care. Have a blessed day. Peace.